Alright guys, so this is going to be my last video for this playlist that I'm going to create with all these videos attached to each other. But this is going to be like a small overview, a little recap on everything that we touched based on in this video. So this video might be like a little bit longer. But let's start with internal range of liquidity and external range of liquidity. So as you can see, ERL, external range of liquidity, is the swing highs and lows for our liquidities. So I'm gonna try and see if I can show you guys a quick example with everything. I want to make sure that I'm like getting at different times because I feel like it's just targeting the same chart. You know what I mean? So I'm just trying to see if I can switch everything up. Okay, so our external range of liquidities are outside. Here's our outside liquidity. Here's another outside liquidity. And our swing points. So there's another one. Here's another one right here. So as you can tell, bringing in order flow, that we're only sweeping up liquidity up here, and we're not touching down here. So this is indicating that we're still going up in an uptrend. But that doesn't mean that outside liquidity won't get swept later on. As you can see, this huge dump ended up sweeping every single entire liquidity. So with our internal range of liquidity, we are targeting PD arrays, mostly fair value gaps is what I look into. So with our boxes right here, what are we looking at? So we zoom in a little bit and we notice, our internal range of liquidity. There's a little one right here. Let's go to this box. Here's our PD array right here. What did price do? As we built up, we created this fair value gap right here. What did price do later on? We ended up coming back down into it, and then that's, you could tell with our bullish order flow, we respected this PD array, and we're still having continuation upwards. And as you can see, we see another one right here. So we see our PD array, it's respected, and then we keep on going upward. So let's move on to the next one. We're gonna move on to our candlesticks with our open, high, low, close. That was probably even worse. Open, low, high, close. Our high time frame bearish candlestick and our high time frame bullish candlestick. So our highs and our lows are creating the wicks. This is our bearish candle right here. And let's say we have a wick down at this bottom. Okay. So what would be our open for our bearish candle? This body right here, not the wick, the body that's right here. This is where we opened. As you can tell, we pick up where we left off at with our previous candle. So we opened up right here. Our high was created, making this wick. We then distribute all the way back down. Price tapped into this area, creating its wick, but we did not close in this area, so we ended up closing right up here. This is what creates our open high, low, close. And then vice versa with our bullish candles. And this is an hour time frame, so this entire candle took an hour to make. And then if we were to go on a lower time frame, we'll be able to see little candles start to form up. We'll see that our manipulation and then our distribution. And then keep in mind, as I'm also going to throw in PO3, we accumulate right here with open, we manipulate, creating our high, and then we distribute, making all the volatility go with our trades, So this is our AMD. Our AMD will be right here. Our bullish candle, accumulate up here with open, we manipulate lower, and then we distribute all the way back up. What do we do when we spot AMD or PO3? We want to target manipulation, find our entry, and use the distribution leg and volatility with our trades. That's how we can get an A+ setup. You can use this with our weekly, daily, or intraday candles. This is how sometimes you'll be able to tell if we're going to have any continuation of bearish order flow on a higher time frame or continuation on a bullish high time frame. How do we know when price is forming continuation? We respect our PD arrays or disrespect. That depends if we're bullish or bearish or not. So moving on, our time frame alignment. Our weekly PD array matches with our 4-hour execution. Our daily PD array to an hour execution, 4 hour, 15 minutes, 1 hour, 5 minutes, 15 minutes to our 1 minute. This one, pretty simple with all this. You know, nothing is too overcomplicated with any of that. In our most significant PD arrays, we will use fair value gaps, inverse fair value gaps, our order blocks, and I don't worry about breaker blocks really. I don't trade breaker blocks, but order blocks, fair value gaps, BPRs is when you find a bullish and bearish, like right here. So close enough. Bullish fair value gap right here, and then we have a bearish fair value gap right here. As long as they like still overlap each other, this is still a magnet on where price will end up sweeping. Let me check what I got down. When we went over our risk management, this is how you'll be able to tell from converting our USD risk and how to find our USD risk that we're putting in each trade, and then converting this into ticks. Every tick has a different kind of price. So right now we're on NASDAQ. Our tick is going to be much different compared to ES. And if we want to make everything even more different, not complex, just different, we then move on to micros. So micros ticks have their own price when it comes to E-mini ticks. We got SMTs. I'm sure this is something that you guys can catch on very easy. Pull in our double charts. This is how you pull your double chart out. Okay, so if we're gonna find an SMT example, so what do we notice right here? Our liquidity ends up getting swept on this pair, going on the exact candle. Price doesn't sweep this. What happens when we have a pair that ends up getting swept and the other pair that doesn't? We create this is a bullish SMT, which causes bearish order flow reversal. As you can see right here, we had our reversal. Go wick to wick. Our swing points is what we're targeting because that's our highest liquidity marks. So we got one right here. Price sweeps, price almost but doesn't quite. What does that mean? We created our bearish SMT. We get a reversal right after that. So that's our examples for SMTs. And I already went over time frame alignment. For those of you that were able to stick around with all these videos, appreciate all the love and attention. For those of you that are new, this is just going to be a step-by-step on everything, on the essentials. Not everything that I know, just specifically the essentials. So appreciate you guys so much. You have no idea how much it actually genuinely means to me when you guys. Hope you guys have a great rest of your day. Thank you.